Welcome, everyone, to Name Confidential Live.
Hi, thanks to everybody for joining today. Today for Name Confidential, I'm Kenton Kilmer hosting Kurt Ostegaard, who is a Wall Street veteran who has been a portfolio manager, strategist, and risk manager on trading floors. His experience builds on valuation, risk, and trading models in equity, fixed income, futures, residential mortgage, and exotic derivative markets. Kurt also has experience in startups, mergers, and crisis turnaround situations with non-financial employment ranging from policy work in the U.S. Congress and executive producer in a film production company. Kurt, it's wonderful to have you today. How are you doing?
Well, thanks, Ken. It's great to be here. I'm glad to be here and help you out.
Thank you so much. At the National Association of Active Investment Managers, it's a group of RIAs and investment managers who are often swapping different ideas, from technical indicators to valuation strategies. When I heard that we had an opportunity looking for a speaker, and you were kind enough to fill in, we started talking about your expertise in use of breadth and range bounds in your security selection process. I figure, what's going on in the world of breadth from your point of view?
Well, funny you should ask about that. I've been looking at doing some fascinating work on cycles lately, and so here, let me show you what I got. All right, here we've got this is um, a a graph of breadth for the S&P 500 for about a month. And I made this earlier this week. And this is just showing the open to close. It's not the full return close to close, but just what happens during the day. And so each one of these little mountains, it's a ridgeline plot, is a different day. And some stocks go up, some stocks go down. But you can see in general, the top two in the back, those were some down days back at the last Fed meeting. But you can see how, in general, a lot of it's fairly in line, not too predominant one way or another. And in a range-bound market like that, here we can also look at some cycles and the cycle slide. And right. And so everyone loves a trend, but you can't order up a trend, and the market's only trending, what, 10 to 20% of the time. So what do you do the rest of the time? And so here's some opportunities in that I'm looking at, I have a graph up now of Accenture. And over the last couple of months, it really hasn't broken out one way or another. It goes up, goes down, up and down. And so in order to find a good cycle to trade in that, I took the candlesticks are in the top. Then the second has the red and green line is a bandpass filter, which is identifying sort of the wave-like patterns in the movement of the stock. And it's based on trigonometry and and it's green when it goes up, red when it goes down. It takes out the high frequency stuff that's basically just noise at high end, and it takes out the trends because that would just a trend would be slow enough to just sort of buy and hold, and it's looking for frequencies that are in between, that are short enough so that you can put on more tactical trades, sort of for a week or so. And so by identifying them, there's this graph. Then the white graph is the differential for the bandpass, and that shows the rate of change of that. And the thin red line before that is the second order differential. And so you can see that they the higher order differentials lead the movement in the same way that sort of the cosine is the derivative of the sine. And when looking at that graph, the as long as the patterns are somewhat stable, then you can look at that as sort of a leading indicator of what the next move is going to be. And you can, by looking at these, you can see that and sometimes it's a fairly useful predictor of what's going to happen.
Absolutely.
Mm-hmm. So,
So,
and then looking at the bottom one, that's a similar bandpass filter, but I bounded that between plus and minus 1 so that you could compare this to the rest of the S&P 500 and start looking for interesting patterns. Then this purple line on that is another form of prediction. There are a few different ways of predicting, and I just have a few different calculations. So you can see that, different angles to come toward the same result. And if a lot of the different indicators agree, then it might be a pretty good trade. Might increase the confidence and success. So it's an interesting little piece of work. And
what's an interesting that I'm looking at from the middle line chart is that the line that's red and green, its duration or the time at which that it's green, then red, then green, then red is relatively consistent over this time frame. Is that something that you see often with this chart, or is it something unique to how Accenture is trading since the beginning of November?
It's good for illustrating here. It's not always the case. In fact, it does look pretty stable here, and that can sort of highlight how it works, but it's not really always stable. You want to look and try to find more stable ones. And there are ways to analyze it to to filter out the stable ones too. So that's not too hard because you can analyze what the period is for basically the whole S&P 500, each stock, and then look at them over time and see how stable they are, and then just filter the ones that look like they're well behaved.
So if we go to the current point at the end here, we have a green line trending up. We've got our white line just below that. Could you tell us one more time about what this graph is telling us in the current where we are today?
Sure. So it's going up. It may have another day or two to go up. You can see that the first derivative is getting flat, so that's and so it turns down when it goes down, and the second derivative has already gone down to about 0, so it doesn't have much more left in it. So you could start putting in your stops or your profit targets because it doesn't look like it's going up very far from here. So you can see the pattern before when this turns down. See the little red one is turned down back there. Then it gets kind of flat, and then as the white goes down, then it ultimately turns down here. So we're in about this kind of phase where it doesn't look like it has much more of an upside at this point. But so that's the kind of pattern. That's my read on the pattern about the current point.
And what about the line chart under it?
And the line chart under it. This one seems to indicate that it's probably got another couple of days left. So you're not totally in agreement here. Oops, sorry, I can't do that. Oops. But yes, so right, these are still going up, and so they still look like they have another day or two favorably, but they have the bottom one, you can see they have sharper cuts
Right.
when they do happen. Some of these are smoother, but it's so there's a little divergence there. But approaching reversal.
Mhm. And
Just
what would you be looking for in order that would I don't know if you're long only, you're looking at short exposure as well. What would some of these indicators need to look like if you were actually looking at shorting this?
Well, yeah, long and short indications are slightly different. They're not just the reverse of each other because usually up moves are slower and down moves are faster. So up the stairs, out the window. Um, so you have to be a little bit more sensitive for looking at shorts um, because they see these, drops down fairly quickly. It drops down there, comes back up. But so that is, you can see down here, nice. These are interesting bottom buy areas right after the top. And this one indicator, it it shows some of the speed. I believe this one is looking at a Taylor series of, and this can show an overshoot, but that could be and it only overshoots like that on the bottom side and not really a little bit on the top, on the up side, but more rarely. Um, so these are nice turning points when they jump up like that. Mm-hmm.
Do you find yourself sticking to a specific hold period depending on these indicators? You mentioned a week or so, the timing with which that these indicators have some forward looking. Does that um, affect how your security selection or holding period?
Oh yeah, it's you can see the recent history and how it's been behaving, and just sort of um, a good guess is that it's going to be somewhat consistent, not 100% consistent, but um, as long as there's no big news, then you could see some sort of a pattern that could be reasonably probable to continue.
Mhm. Well, this is something we didn't discuss on this last previous call, but maybe I'll mix it up a little bit. I remember us discussing some of your early stage research into the use of AI and neural networks in trading.
Mhm.
How has that has this signals both in terms of market breadth, range bounds on individual security basis, on a market driven basis, been adapted into how you see implementing these in some deep learning strategies?
Well, yeah, you can take all these numbers and feed them into a deep learning uh, program as features and use them to predict short-term moves. And it's I've been starting on that. It takes a little bit of work. It's the TensorFlow and Keras are pretty powerful, and I'm putting that together right now. But it looks very promising because if you get a working model, then a good AI version of it can improve the performance by about 10% or so. But you really need something of a working model to put into the deep learning. You can't just say, here are the here are the right trades. Show me how to get them. You need some way for it to optimize some sort of a method or some sort of methodology to really get going, and it can improve on that. So
Have
it.
you
Mhm.
Are there specific optimizers or strategies that come to mind, ones that have worked or ones that have not so worked with some of the back testing that you've been implementing?
Well, it is fascinating because the fundamental difference between sort of old traditional programming and AI is that with the old style, you get a bunch of data and then you'd write a bunch of code, and then the answers would come out based on your code. And if you wrote good code, then you'd get some good answers like which to trade. With deep learning, it's a different paradigm in that you start with the same data, and then you can take code it so that you find all the profitable trades, and then say, using these methods, find all the good trades, and then you can. And so you're having the computer do all the thinking or optimizing there, and it looks very promising. There are a number of good books out there in the field, and they're getting better every day. And it's really very powerful, and it looks extremely promising too.
Any specific models or platforms that you use more often, ChatGPT or Perplexity?
Oh, well, I've been using TensorFlow and Keras, and I've been using those in R. I know it's also native to Python, but those are some um, you can do a lot in not that many lines of code. Really, a whole program, it would be using gradient descent in like a couple dozen lines of code, if that. Uh,
Any words of wisdom for like watch outs if somebody was gonna try their hand at implementing a strategy like this, or that they might have come out on their own on TensorFlow? Any tips for, be careful about these hallucinations or other
yeah.
watch
Well,
gotchas?
yeah, definitely. You've really got to be careful with that and do as much work by hand in parallel so that you know that what you're seeing is what you're expecting to be seeing. And so you have it's good to focus in and get sort of target calculations and sort of confirm what you've already found to make sure that it's behaving appropriately, because it's very easy for these programs to do it sort of they think is right, but it's not actually the calculation that you want to do. So it's you really, it's like they're a wild beast and you're trying to tame it. So you have to make sure that you check the work at every step of the way, um, just to make sure that nothing's gone awry.
Yeah, I mean, that seems really challenging, Kirk, because sometimes you're in the process of trying to discover new insights or new ideas. And at the same time, you're using this tool to be and kind of reinforce what your expected outcome is going to be. Do you
Mhm.
think that, let's say, approach sort of curtails the ability to actually have discovery through implementation of AI? Or are you just using this tool really to just reinforce and perhaps look at data in a different way, but still reach similar conclusions?
Well, you can use AI for many different purposes, and you should use it for like one purpose at a time. And so you can do it for more open-ended research and just see what comes up and see what's interesting. Um, but also, if you're using it for certain trade identifications, then you want to narrow in and focus on that one sort of target, um, and go from there. But it has many uses through all different aspects of portfolio management.
Do you think with these new tools, at least the way that you implement them, does it affect your typical holding period?
Well, it gives you you can adjust them and tune them to whatever holding period you're looking for, really. And so you can adapt the tool to fit what you're comfortable with. So for this, I have short-term trades, but you could look for longer-term ones, and that'd be fine.
For
Um,
and for you, it's just about looking at over a week's period or 10 days. Is that right?
Well, uh, for this example, I wanted to show something that's small and easy to follow. And so you could think of the criteria that's really important to you, and then sort of go out and use these to define those, to find what you're looking for. So you can use it as sort of a filtering mechanism just to see what fits your criterion, your preferences, your strategies, and go.
Any more secret sauce in the criteria that you use?
It's at this point I've been building this and it looks pretty good. So we'll other secret sauce, I'd be happy to come and discuss more. You can find my LinkedIn page.
All right. Well, with that, Kurt, can we offer us some words of wisdom? We usually end with a quote. It's a delight to have you.
Oh, great. Hey, thanks. Here, there's an old Teddy Roosevelt quote that he originally gave at the Sorbonne. And he said, "It is not the critic who counts, not the man who points out how the strong man stumbles or where the doer of deeds could have done better. The credit belongs to the man who's actually in the arena, whose face is marred by dust, sweat, and blood, who strives valiantly, who errs and comes short again and again, because there is no effort without error and shortcoming, but who does actually strive to do the deed, who knows the great enthusiasm, the great devotions, who spends himself in a worthy cause, who at the best knows in the end the triumph of high achievement, and who at the worst, if he fails, at least fails while daring greatly, so that his place shall never be with those cold and timid souls who know neither victory nor defeat."
Words hard to follow. Sensational, Kurt. Thank you so much. May we all be the warrior with the blood and sweat and grit on our face.
Okay. Okay. All right. Thanks.
Thank you.
All right. Okay. Thanks.